Hello and welcome. Today we have Danielle Madden with us, and she is a CPA and financial strategist. Danielle believes that having a healthy relationship with your finances and with your money leads to a healthier you in all aspects of your life. And you're probably wondering how you go about doing that. Well, Danielle believes knowledge is power. And in this webinar, we are going to be giving you the knowledge that you need to take hold of your finances and your money. You will be given the freedom to start running your business with ease, the freedom to travel, and the freedom to pamper yourself without guilt. So Danielle works with entrepreneurs to not only figure out and manage the more practical aspects of their money and finances, but she also addresses some of the deeper issues that might be holding you back, sort of your self-limiting beliefs about money and business. So she is here to share her expertise and her awesomeness with us. Welcome, Danielle. Thank you for being here with us.
Thanks for having me.
Of course. So the first question we have for you is, and I get asked this all the time despite myself not being a CPA, it's about tax deductions. I get asked, how do I know what I can deduct? How do I know, what I should be steering my spending on that is tax deductible, and how does it vary with different businesses? So for example, how does it vary between home businesses and bricks and mortar businesses, and then product businesses where you have, you're selling an actual physical product versus services?
Yeah, that's a great question, and I mean, it's something I hear all the time as well. And, to kind of give the simple explanation, a deductible business expense is what is defined as the IRS as anything that is ordinary and necessary in the process of you running your business. So really, like just to give a really blatant example, for example, a DJ, a ordinary and necessary business expense for them would be downloading music and the cost of that. But that for someone, for entrepreneurs like us, that's not really a normal expense. So, it really is dependent on what your business is, and that's why it's important to sit down and take a look, like what are my ordinary and necessary expenses for me to run this business. Now, some more typical examples of that would be, marketing expenses, dues and subscriptions for different, if you subscribe to professional magazines and those kinds of things, business mileage, legal and professional services, for example, if you pay an accountant or a lawyer or different kinds of professional services like that, business insurance, telephone, internet, and utilities payments. Now, a lot of these are actually quite similar for brick and mortar and online businesses. One of the big differences between the two is that for a home-based business, you could take the home office deduction, and that's one that people kind of miss out on a lot. But they've actually created a really simple way for you to take that deduction now. The IRS, simple in terms of the IRS, anyways, and they do it if you just calculate the square footage that you're using of your home office. They just give you a straight $5 per square foot deduction. I don't know, it seems simple to me, maybe not still so simple, but it's a little bit easier than, having to keep all the specific expenses, which is the way you used to have to do it. Also typical expenses for home-based entrepreneurs would be, telephone, internet, cable, or not cable. Well, I guess if cable is part of your business, then you could technically take it. But and then also business mileage, because we're often from home, and then could be driving to different clients, or different things like that. And with business mileage, it's really important to just keep a really specific log of what mileage you're using and that kind of thing. So as I said, it really is just dependent on what your business is, what's ordinary and necessary for you. Again, another typical expense would be education and training. A lot of times, at least for myself, some of the education that I do is enjoyable for me, and so I'm like, oh, that's not a business expense, but it can be, and especially for us entrepreneurs who are living our passion, that's quite the case. So paying attention to those types as well is really important. And these days, tracking your expenses isn't quite as hard as it seems. There's so many online accounting systems that link to your bank accounts where things just flow in, and if you are keeping on top of it monthly and just organizing what are business expenses and what category they go in, then it really saves you a lot of time and in the end a lot of money. So it's really just about, like I said, being on top of it, understanding what your business is and what your business needs are, and then from there, we know as entrepreneurs kind of what we need in our business and what is ordinary and necessary for us in running our business. So we can kind of use, you don't need to be a tax professional to know what's important to your business, and then you may push the work off to a tax professional to keep track of it, but in that way it kind of helps take the confusion out of it. So does that make sense?
It does. Do you have any examples of some online websites or software programs that people might use to keep track of their expenses?
Yeah, there's a couple that I've had experience with or have been hearing about lately. Wave Apps is one of them. Xero, Xero. QuickBooks is a very well-known version, and then Bench is another one. And those are just to name a few off the top of my head. I know I've seen a couple others. I just can't think of exactly what they're called. But so there's just lots of options out there. Even if you use Mint, Mint is a little bit more personal finance related, but it still does the same thing. It at least aggregates your bank accounts, within one place. And again, sort of related, but kind of not, is it's really important with your business, no matter what, whether you're a sole proprietorship, an LLC, or whatever, to have separate business bank accounts. So, a separate checking account, a separate savings account, a separate credit card, because A, it'll just make your life easier because you can sync these to whatever accounting software you're using, and it makes it so much easier to organize. You don't have to, this is personal, this is business. But also, just from a protection standpoint, the IRS can kind of come in and look at that and say, it's actually, I don't want to say completely illegal, but it's very much frowned upon to commingle your personal and business funds. It puts you up for a little bit of liability from a legal standpoint if someone were to come and sue you. It just makes things very muddy. It's something you really want to avoid, and maybe it is an extra $10 a month for that checking account or $45 a year for the credit card, but it's totally worth it, in comparison to someone being able to come after you for those funds that they're not clearly able to determine what's what. So, little tangent, but pretty important.
Yeah, no, definitely. It's great advice. I see that a lot with, especially, startups or new entrepreneurs that I work with, is that their personal checking account is their business checking account. It's one and the same, which is, we don't want to do that. We definitely want to separate them out. So it's good advice.
Absolutely. And one thing that that I actually just thought of that is applicable for many, pretty much all entrepreneurs, is health insurance deductions. And I know we're going to talk about that in a little bit, but that is something that if you don't have employer provided health care, then you can deduct premiums for you, your spouse, and your dependents on your return. On your personal return, the ones that you fund. So that's actually something that's really important that people a lot of times miss, and it's it's a really important deduction to be able to take.
Okay, great. And another thing that I get asked a lot about is tax payment. So, a lot of times people, they're managing their business, they're going about their business, and then at the end of the year, they're like, holy cow, I owe thousands and thousands and thousands of dollars to the IRS. They're just really blindsided by it. So how do we anticipate or manage and forecast how much we're going to owe the IRS in taxes, and what is a good way to sort of manage our payments to them?
Yeah, I mean the IRS, kind of breaks it down for you. They expect payments quarterly, so that's 4 times a year, and so that's a pretty fair, if you can make those payments, then it kind of breaks up that end of the year, oh my gosh, tax liability. However, that's kind of where most people fail to follow through, is actually making those payments, because I will admit the calculation is quite complicated. However, really what's important is, if you really have no idea and you don't plan on calculating what your potential tax will be for the current tax year, if you expect to make the same amount of money and you at least pay 100 of what you owed last year, like throughout the year, by the time you get to 4/15 the next year, then you can avoid penalties. So, if you really just want to, do the bare minimum and not even think about, calculating what you might owe this year, it's important to at least pay in what you paid last year. Now, if your business is going to change considerably, then that may not be the best option for you. But if things are kind of, you're going to be within reason of the same amount of tax owed as last year, then that's a way to go. But it is important because the IRS can actually give you a penalty not only at the end of the year if you're not paid in up to the tax due by 4/15 of the following year, but they can actually penalize you for each estimated payment that you miss. And so that's 4 times a year. That's 4 different opportunities for them to penalize you. And maybe you only owe, 1,000, not only, but and the penalty could be, anywhere like $50 per 4 quarters. But that's still $200 that you could save. Who wants to pay more money for no reason, And it really can be a little bit more simple than we make it if we at least pay those payments 4 times a year. Now, if we want to get specific, we can, there is a way to estimate how much you think you're going to be making for that year and then estimate the tax that you'll owe on that. And essentially what you do is you take how you've performed to the year thus far, you kind of put it through the tax calculation that's on the forms, which I assume most people would probably have an accountant do that, which I would probably recommend. And then you would, kind of extrapolate that for the whole year, and this is how much I think I'm going to make, therefore I'm going to pay this much. So, there's a couple different ways to do that. But again, I can't stress enough the importance of paying in some sort of estimated payment on each of the 4 due dates, and they're every 3 months, so they're once a quarter. We have another one coming up on January 15th of 2015 that'll go towards your 2014 tax liability. And so if you haven't paid anything in yet towards your 2014 tax liability, the return that you're going to prepare in April of 2015, then I would suggest paying at least some money in at that point. Now, it's one thing to say, okay, I'm going to pay my estimated payments and calculating it out, but if we're not, as entrepreneurs, saving money towards that payment, then it's still going to hurt no matter when we pay it, whether we pay it once a year or 4 times a year, whether we get the penalty or not. So something that I recommend is either having a separate savings account or in that business savings account that is separate from your personal account that I suggested you have, is every time you get paid, just throw 25% in there. And you know what? If at the end of the year you're only in the 15% tax bracket, or whatever happens, then hey, you've got some extra money that you can spend on your biz. But you want to be prepared ahead of time and have that money set aside. Because for example, for anyone who's working and getting a W-2, that already happens for them, but they don't even have to think about it. The employer withholds that money for them. So we just essentially have to take ownership and do that for ourselves and really save ourselves some time and stress in the end. So.
Okay, great. Thank you so much. That was very helpful.
Good.
Well, so let's talk about, I get asked a lot about strategies. Like, how do you strategize, like, to determine what your income goals are going to be and your bookkeeping goals and things like that? How do you strategize from an accounting perspective?
Yeah, it's really, I think the first thing to do is to really get clear on, what expenses you're taking and really just getting organized with that. And because if you're not organized with your books, then there's really no way that you can create goals, because you can't just, there is value in creating goals just based on revenue, but you can't create goals just based on revenue because, whether we're talking about taxes or not, expenses are taking money away from that revenue that you're making. So we have to get clear on what revenue you're making, which is always easy for us to track because we love tracking what we're making, right? Mm-hmm. But we also have to get clear on those expenses, and not only from a tax perspective of just like, oh, I can take this deduction to reduce my taxable income, but like, really, how much am I spending on dues and subscriptions? How much am I spending on independent contractors? How much am I spending on my internet bill? And because when we look at where we're spending our money and say, for example, we're like, all right, I really want a big year in 2015, and I've got all these plans for, increasing my income, but I know I really just think my expenses are too high. Well, if you don't know what your expenses are and you're not tracking them in the first place, then there's no way for you to figure out how to reduce them. So, there's a lot of ways that we can, once we kind of get organized with that, we can kind of look in and see, okay, here's where I can kind of cut some of those expenses there. And, this was really necessary for me before, but now that I'm up-leveling my business, maybe not so necessary. So it's just really important to take a look at that. And, and then, like I said, with these accounting softwares, it's really easy to automate your record keeping. So trying, really signing up for one of the softwares, automating your record keeping, then that way it just kind of takes away some of the burden, right?
Right.
And then from kind of a tax perspective, it's, there are different ways that you can, strategize to reduce your taxable income. Like I already talked about expenses. Clearly, they're very important to reducing your taxable income, but there's, it's just getting smart and either talking to a CPA or researching yourself, what are some other additional deductions that I can take that can help me, not only now, but in the future. So, for example, a couple of good ones are, to invest in an IRA. That's something that as entrepreneurs we can totally let that slide. It's so easy. We're like, oh, all the money's got to go to the business. I'm barely getting paid. What's going on here? But an IRA, investing in an IRA is not only going to help you now because you can get a tax deduction for it, but it's also going to help you in the future, obviously, because you're putting money towards savings for yourself and your family for the future. So that's one that I often tell people to consider looking at as kind of a financial goal as well as a tax kind of break. And then also, there's also ways to look at whether, it's the end of the year now, for example. So if you have a client that they could either pay you now or they could pay you in January, and it really isn't going to make that big of a difference to you or them, then that's another way to kind of, that's a legal way to strategize your taxable income as well. So, does that make sense?
Yeah.
Okay. Yeah. Because obviously, more income in one year versus the other year, you can kind of affect your taxable income that way. But yeah, so once we've got the record straight, we've done some tax planning, then it's just important to, another metric that I really like to take a look at is cash flow. Because, you can, like I said, revenue is great and we want to be bringing that in, but if we're not, if we're just breaking even because our expenses are as much as our revenue, then we're not really doing much there. So taking a look at cash flow and maybe making some monthly cash flow goals is a good thing to do. And then also just, we're coming to the end of 2014, get your books organized, look and see how was I doing on a monthly basis? Because in our head we may have one idea of how we were doing, but we really need to take like a real harsh, maybe not harsh, look at how we did, and then we can determine, okay, when I was making this much a month, this felt really good, therefore I'm going to kind of use that to base my 2015 goals off of that. So, there's a number of different ways to go about strategizing, creating goals. It just kind of depends on what your business is and what feels good for you, but those are a couple of my ways that I like to do it.
Okay, great. So now let's talk about all this healthcare business. This is the first year that, people have to kind of worry about it on their taxes. Is that right?
Yes. Yeah. This is the first year that if you don't have health insurance, then you're going to get a penalty on your taxes. This is part of the Affordable Care Act, and I'm going to be honest, it even snuck up on me a little bit. I knew it was coming, but I've just been doing a little bit more research lately, and I think it's going to be a bit of a surprise for people, but there's definitely ways to go about planning for it and understanding it. Just to give you a little bit of an understanding, if you happen to be covered for the whole year, then that's great. You don't have to worry about it. Just if you're an entrepreneur and you're paying the premiums out of pocket, then just make sure to deduct those. But if you were only covered for part of the year or none of the year at all, then you are going to owe a penalty for that. The lowest penalty that you can owe is $95. However, that's probably unlikely. It's either $95 or it's based on a percentage of your taxable income. So that's probably more of the bracket that people here are going to fall into. However, there is a limit, which is good. It's based on what the Affordable Care Act stipulates as a kind of a moderate health care plan for you. So if you haven't had healthcare this year, it's coming. Just be prepared. Know that it's going to be an additional penalty on top of your tax due. So, and there's different tax calculators out there online that you can kind of go figure that out and figure out what your penalty is, and you can, kind of save a little bit extra for that. You don't, at this time, need to make estimated payments towards that penalty. So if you're going to make an estimated payment in January 2015, as I suggested, then don't worry about that. But just know that it's coming come April. But going forward to 2015, the penalty is going to be slightly larger, but for those of you who just are completely not interested or it's just not within your budget right now to afford health insurance paying monthly, know that most likely, and it's case dependent, that the penalty is still going to be lower probably than paying monthly insurance premiums. Now, there's, like I said, completely different scenarios. I've heard of $1 a month health care in California. Don't ask me how legit that is, but so like I said, very case dependent, but this is something that you want to look at as well. But for those of you who want health insurance, I really think it's wise to check with the various state exchanges, because as entrepreneurs, for someone who's not an entrepreneur, they just enter their W-2 wages and like, this is how much I make. They give you, it's an income-based model, right? But for entrepreneurs, we can enter our net income. So we're not just entering our revenue on that line, we're entering revenue minus expenses. So even though, it brings down, it can, I don't know, depends on how your business is doing, it can bring down that number a little bit and give you a little bit more favorable of a tax break or a monthly break on those premiums. So, I know myself, I just kind of assumed it would be really expensive, and then I went in and I did it based on income less expenses, and I was like, wow, this actually does make a really big difference. And I know many fellow entrepreneurs have done the same thing. So don't be too scared of it. If you're really concerned about being covered, get in there, take a look, take charge, and get to doing that. So, and then know that, like I said, you can deduct it on your tax return as self-employed health insurance premiums, and so that kind of helps you out too.
Great. And then do you have anything else you want to add? Any sort of like blaring questions you get from entrepreneurs a lot that you think should be addressed?
The deductions and those kinds of things are really what I get asked a lot. Actually, I do also get asked quite frequently about legal entity structure, or in layman's terms, I suppose, whether you should be a sole proprietor, an LLC, a corporation. And when you're just starting out, and if it's just you, then I say there's nothing wrong with being a sole proprietor. It really kind of depends on what your business is. There are some businesses where you're, like, for example, my business, where I'm giving people financial advice, and that's something where there's a lot of potential liability if someone doesn't like my advice, or if it goes the wrong way or whatever. So in my case, if I'm choosing to be a sole proprietor, then I'm going to opt to also have insurance, business insurance, that kind of saves me, not depending on how big my insurance is. So there's that option. If you want to be a sole proprietor, you don't have to worry about all the paperwork and all that additional stuff, or creating a corporation or any of that. If you get business insurance, then that kind of covers you from a liability perspective. But an LLC, as a as a single solopreneur, I guess, you can also form an LLC and just be a single member LLC, and that provides you a little bit more legal protection and separation of your personal and business assets. And that's again where it's very important to have the different bank accounts, although it is with the sole proprietorship as well. Typically, for starting entrepreneurs, not that important to be a C corporation or an S corporation, pretty much. And it really depends on if you're like a startup and you're creating, depends on what you're creating. If you're going to be creating all the software and there may be more space for that to be a possibility. But this is something that it's really important to talk to a professional about, because a lot of times people can create these corporations or LLCs when they really don't have to, and then they end up paying all these fees. And for example, in California, the first year that you form an LLC, you have to pay $1,600. And if you really don't need to be an LLC, or you could form it elsewhere, why would you pay $1,600 just to stay in California? So it's just really important to be knowledgeable, and as much as entrepreneurs want to just be like, I'm so excited about my business and I just want to do it, it is really, really important to set these strong foundations, when you're starting out, or if you're already going, then it's never too late to do it. So maybe a bit of a boring explanation of business entities there, but also probably hopefully helpful.
Yes, definitely. And then I just have a final question for you. What, in your own business, what tactics and strategies have you used personally that have really helped grow your business and propel it forward?
I think the biggest thing for me, honestly, hasn't even been business related. It's really been personal related. And you kind of touched on this, and this is kind of my philosophy for even my financial business as well, is really getting to the core of, what are my beliefs around business, success, money that could be holding me back behind the scenes, no matter how much work I'm doing or whatever, if I'm having these beliefs and fears in the background that are running the story of me. For example, if it was, I think I can't, I just can't be successful, or, this is just too hard, or whatever, then those are what's going to run the story. So really getting an understanding of what kinds of beliefs that I was having that were, kind of holding me back, and then also just making friends with my fear. I run into fear every single day. Fear of what people are going to think, fear of if I'm going to perform, fear if I'm going to sound like an idiot on this podcast, and it's really just about like realizing when I have fear and accepting it and moving forward anyways. And then, from more of a practical perspective, like really getting control of my productivity and organizing my schedule. For anyone who's a Danielle Laporte fan, one of my core desired feelings is freedom, and that's really important to me. And when I first started out, especially after coming from a job in public accounting that was so busy and hectic and not free, I was like, no, I can do this. I can just have my own schedule, and I'll go travel and blah blah blah. And I can do that, but there is freedom and structure as well, and I've gotten so much more done now that I've started to plan my days and set certain times and boundaries for working on different things, and taking time the night before to say, this is what I'm working on tomorrow. And a really great friend of mine has been very encouraging to me and was like, you know what, you might fail every day, and half the time I do, but it's still about the practice of setting my goals and intentions for the day and really trying to stick to those. And I've only gotten better as I've started to do it, and that has been a really huge impact on my business. So
that is awesome. I would echo what you just said. I think when my business started having a big breakthrough is when I got over my self-limiting beliefs. You can't make money if you don't believe you can make money, or you can't generate wealth if you don't believe you can generate wealth. So I think a lot of it is just getting, kind of just having a heart-to-heart with yourself and figuring out what it is that is holding you back. And then again, from a more practical standpoint is, I sort of had that same view, like, oh, I'm going to be, I'm going to work from home online, and I can travel, and I'm going to have all this freedom. It's going to be great. And yes, you can do that, but you actually have to get work done too. So, when I started planning out my day and scheduling, my most important tasks and setting goals for myself, I really started being more productive as well.
Yeah, absolutely. And just going back to the beliefs about making money and just your business, a lot of these are inherited from society or our family members, just like the way we were brought up. And in these times, being an entrepreneur is kind of like being an outcast, right? It's not the norm, and so you might have beliefs against like how hard it is to be an entrepreneur, and your chances of success, or the only way I can make money is to work on a 9-to-5 job, and that may be, you may not even realize that you have these, they may be running in the background, and that's why it's important to kind of, like you said, have a heart-to-heart with yourself, take a step back and look and see where those are popping up, and then just it's really just about acknowledging and being like, all right, I'm going to move forward anyways, and just sticking to your guns and knowing what you really want in your business.
Awesome. Well, thank you so much, Danielle. I really appreciate you being here and sharing your knowledge and expertise with us.
Of course. I am happy to answer any questions that anyone else may have.
So if anyone wants to get in touch with you, what is the best way to connect with you?
You can connect with me on my website, www.daniellemadden.com. And then you can also connect with me on Facebook. I have a page, Danielle Madden, and then or on LinkedIn, all Danielle Madden. And the last name is Madden, like John Madden. Not related, but sometimes I pretend.
All right, and there's links below this video for you guys to access Danielle if you want to reach out to her and see maybe how she can help you grow your business financially. Anything else? Any last notes, Danielle? Or are we good?
Nope, that's it. Thank you so much for having me. I appreciate it.
All right, great. Well, everyone have a great day, and we will see you. Well, I will see you tomorrow on our next online event. Thanks.